Today's video is the ultimate guide for dual income households. We're going to talk about why the W-4 is so important, especially for those of you who are filing jointly with a spouse. And this also will be critical if it is a new job situation or you recently, got married and so your filing status is changing. It's very important that if any of these things are happening, you're updating your W-4 with the HR department at your job and that your spouse is doing the same. We see all the time spouses don't make these necessary changes. And then when tax time rolls around, they end up owing quite a bit of money. So, in today's video, let's dive into some examples. So, one thing that we see a lot would be spouses, maybe they were single and they finally get married, okay, and they don't update their W-4, okay? So, by default, if you were single, most likely your W-4, just had the box single checked. And if that's your only job, maybe the rest of the W-4 had no other information. You have no dependents, you have no other jobs, you just have the one job throughout the year. So in this case, you would be withholding based on your salary and the single tax brackets. But if you get married, now your tax brackets are doubling because you and your spouse are filing together. So what we'll see sometimes is maybe once you get married, if maybe one of the spouses ends up being a stay-at-home parent and you start having children and now only one spouse is working. So if this is the case, then it's important to update the W-4 with your HR department, let them know you're married filing jointly, let them know that you now have dependents, and it's likely that you would have been previously withholding too much because they would have been withholding based on you being a single individual with the smaller tax brackets and without the dependents. However, sometimes we see the inverse of this where a couple gets married, they're both working, neither update their W-4, and the issue now is that even though the tax brackets have doubled, if you update your W-4 and notate that you're married filing jointly, but you don't also update and go through the section about the spouse's income, then possibly what's happening is your HR department is assuming that you now have the double tax brackets and you're the only income for your family. So then they're going to be withholding at a small rate, not enough. And then when tax time rolls around, you might be surprised that you have a tax bill. So we would definitely want to avoid that situation. So this is why the W-4 is so important, especially for these dual income situations. If you're changing jobs a lot or if you have multiple jobs throughout the year, the same thing applies, because these employers aren't talking with one another. So by default, your employer is just going to assume that that's your only job. So that's why it's super important on these W-4s to notate that you have a second job or a third job, or this, in this situation, you have a spouse who works and there's income, over here. So these things are all going to be very important because otherwise it's very possible that not enough tax is being withheld. And we don't want you to get into, 2026 and have a big tax bill that gets you by surprise. So let's talk about the W-4 for married filing jointly. Here are your checklist items for 2025 W-4. Step 1, enter your personal info and select married filing jointly. That's very easy, as you can see in step 1. The big thing here, make sure everything is filled out correctly, no typos, and you're checking married filing jointly. Like I said before, if you check married filing jointly, this is letting your employer know that you're going to have your tax brackets doubled. Okay. So, again, if you're marking single, they're assuming that your tax brackets are about half of what they would be if you were married filing jointly. So that means that more of your income is being taxed in the lower brackets, in the 10%, the 12%, the 22%. Whereas if you're single, those limits come twice as fast. So step 1, check the married filing jointly box. Step 2, though, on both of the W-4s, okay, so on the husband and the wife, for example, on both of their W-4s, in step 2, we want to check box 2C to indicate that both spouses work. This is super important, okay? If each spouse checks married filing jointly, but they fail to check that box that I'm mentioning 2C. The big issue here is the employer is going to assume that so let me say this, each employer will assume that this is the only spouse working and the other spouse is like a stay-at-home parent, okay? And so then it's very possible that they're going to assume you're in these bigger tax brackets and they're going to withhold less because of it. But in reality, if each employer is assuming that, then neither of you are withholding enough. So step two is super important if you're married and checking that married filing jointly box in step one. And in step two, make sure to check box 2C on both W-4s. Okay, step three. This is where you claim dependents. This is another huge issue that we see. It may seem like, let's say you have a husband and wife, they each work and you have one child. Okay. So on step three, it may make sense that both spouses on their W-4 fill out and claim their dependent. However, we only need one of the spouses to do this. Okay. So when both spouses do so, then your employer is assuming that you're getting the full 2,000 child tax credit. So they're going to withhold less tax because they're expecting that you're going to claim the child tax credit. However, if both employers are assuming this, then you're double counting your child tax credit. And so that's going to be a situation where you're not withholding enough. So it's very important in step three that only one of the spouses claim the children, right? So if you have two children, you're going to look at step three, and there's a line that says multiply the number of qualifying children under age 17 by 2,000. Okay, so if you had two kids and they're 8 and 10 years old, you're going to want to put 4,000 in that first box. And then if, let's say you had a third child who was 18, then you would put 500 in the next box. This would be other dependents above the age of 17. And then the final number for box three in this case would be 4,500. Three kids, two under 17, one over. Okay. And so then on step three, you've got 4,500, but we only want one spouse to do so. So that's the big thing. Step two, both spouses need to check 2C if you're both working, but step three, only one. I can't emphasize that enough. Okay. Step 4C, using the multiple jobs worksheet to calculate extra withholding. Okay, so this is something I would recommend if you're both working, and especially if your jobs are kind of one person's making a lot more than the other, for example. Okay, so on the multiple jobs worksheet, what you do is it's fairly self-explanatory, but what you're going to do is there's going to be a column on the leftmost side. Okay, and you're going to want to make sure that you're in the married filing jointly, which is the top grid, and you're going to look on the very left side and it says higher paying job annual taxable wage and salary. So let's say my annual salary is the highest in my household and my wife also works. Okay, so we're going to use my salary as our starting point. So in this column on the left, let's just say, for example, that I make $125,000 a year. So in this leftmost column, I'm going to find this section that says 100,000 through 149,999. And then I'm going to look at the top rows. So I found my column spot here. Now I'm going to look at the rows on the top, and let's say my wife works, but she only makes 50,000 a year. So then I am going to follow I'm going to start at the column 100,000 to 149,999, and I'm going to move to the right until I reach her column. So I'm moving across this row until I get to the column that says 50,000 through 59,999. And as you can see here, we have a number, 9,930, where these two intersect. Okay, so what we want to do now, we're going to go to page 3. So we were on page 4, and that's where the tables are. If you go up one page, backwards one page, you're going to enter this number on line 1 where it says 2 jobs, okay? This says if you have 2 jobs, or if you're married filing jointly and you and your spouse each have 1 job. Okay, so in our example today, we're pretending that each spouse works, we each have a job, so we're coming up with this number. I do want to mention, for some people, maybe you're single but you have 2 jobs, you're working 2 jobs. That's same example applies here. So you would use the exact same table to come up with a number. But in our case, we are let's say we're just 2 spouses We have one job each, and we wanted to make sure that we're withholding enough, combined. So that's what we're doing. Box one. If there were three jobs, then you could look at this step two. But in our case, we're skipping down to line three. So we've put on line one 9,930. Okay. Now we're skipping to line three. On line three, it says enter the number of pay periods per year for the highest paying job. For example, if that job pays weekly, enter 52. If it pays every other week, enter 26. If it's monthly, 12, etc. So you're going to want to look at both of your jobs and see how are these pay periods going. Okay, so let's say um, the pay period is biweekly. That's going to be the highest paying job is biweekly. So now we figured out on line 3, 26 is our pay period number. So we're going to divide line 1 by 26, and that's going to come out to $381.92, which is going to be written on line 4. And ultimately, what we're doing with this $382 is we're going to ultimately put that on step 4C. So if you go way back up to page 1, step 4C, where it says extra withholding, we're going to want to put $382 here. What that's going to do is that is going to add extra withholding to the spouse with the higher paying job each pay period. So each pay period, the spouse with the higher paying job will withhold to make up for the difference here. So that's why this is so important. We want to make sure if you're in a situation where you have two jobs or you have a spouse who works, we want to make sure that you're looking at the tables, filling out the multiple jobs worksheet, okay, and ultimately you're getting that step 4 figured out correctly. All right. Step 5 is signing and submitting to your employer. So obviously that's the final step. Now I want to mention here your employer should allow you to edit your W-4 at any time. So things change. Maybe you were married, but then your spouse stopped working. Right? You had a child, and she decided to become a stay-at-home mom in this example. Okay. Well, then what you're going to want to do is you're going to want to update your W-4. You're going to want to notate that you now have a dependent. Right? So you're going to update that step 2 we talked about, or I'm sorry, step 3 with the dependents, and then maybe if your spouse is no longer working, then you also need to notate that you're the only income. So this would be kind of the reverse example where now we don't want to withhold too much and give the government, an interest-free loan all year. We'd rather get as close to a break even when we file our tax return as possible. So here's a real life example I want to talk about. Um, let's say we have a couple. We'll call them John and Sylvia. They each earn 115,000 and they have one child. Here's what they did, okay? They checked box 2C on each W-4. We talked about that earlier. Box 2C, letting your employers know that there are two total jobs, one for one spouse, one for the other spouse. They claimed the 2,000 child tax credit on John's W-4 only, okay? So John is making sure to let his employer know that he has a child and he's claiming a dependent. So he's going to get a $2,000 tax credit on his joint tax return when he and his wife file. Again, only one of the spouses are going to want to add this information to the W-4. Then they use the worksheet to calculate $570 extra withholding per paycheck and added it to John's form as well. Okay. So again, this is something else that's only going on one of the W-4s, not both. Okay. So that's another important thing to mention. And this strategy helped them avoid a $4,000 tax bill that they would have had if they had not done so. So maybe the year before they didn't have their W-4s updated, and when tax time came around, they weren't withholding enough, and so they got hit with owing a 4,000 tax bill. Plus, maybe it took them a little while to file, and they had penalty and interest. Okay, so we don't want that to happen to anyone watching this video. So some final tips here. Update that W-4 whenever your financial situation changes. Okay, that's a new job, a baby, maybe you pick up a side gig. Okay, maybe you start your own business. These are all reasons we want to update the W-4. So a lot of people don't want to mess with it. They don't want to go to HR. They feel like it's too much of a hassle. but it is seriously worth the 15 minutes that it'll take to update this, to make sure that you're not underpaid. That's the big one. We really don't want to be underpaid, because then you can get hit with that penalty and interest. Taxes don't have to be stressful, okay? With the right W-4 strategy, dual income households can take control of their finances. So we want to help you. If you've seen this video, if you have questions, if something was not explained uh, well enough, please comment below. Let us know. Also, in the description, we have another video that we did a year or two ago about step by step filling out this W-4, maybe a little bit more info. So if you're interested in that, please check that out. Again, thanks so much for tuning in today, and we'll see you next time.